Good morning, everyone. It's Stephen Whiteside here from the uptrend.com with your morning market outlook for Monday, March 9th, 2026. Well, I'm a bit groggy this morning. I stayed up too late watching the futures, and this time change has thrown me off a bit this morning. So I'll try to keep this very brief since we're starting off rather late this morning. Now, stock index futures recovered a lot from their overnight losses, but they're still down across the board. Last night, before midnight, we saw the S&P break down below the 6,600 level, got as low as 6,580 before recovering. So it's recovered about half of its losses. And here we are, coming in this morning. We'll be watching that number from last night closely to see if it gets taken out on Monday. And then crude oil has pulled back from its overnight highs, currently trading just around $100. It was up at the 115 level last night before midnight, before starting to pull back. So futures not as bad as they were 8 or 10 hours ago, but still we're going to see some selling at the open on Monday morning. Now, we're also expecting, of course, the energy ETFs to move up, the USO, the gasoline, UGA. I expect those to continue to move higher. What's in question, of course, is always whether the corresponding stocks move up as well. There is a chance that if the stock market heads lower, it could pull these stocks with them, with the rest of the market. Remember, a lot of the stocks that are in the energy sector are in some of the major ETFs, and if those ETFs are sold off, they'll be selling off the shares in those energy companies as well. So in the Canadian market, energy stocks were down 0.41% after making a new high on Friday. The U.S. energy stocks were up slightly, just 9 cents on the day on Friday after making a new high on Monday. And then we did not retake that high or retest that high during the week. So that high could be in place right now. We'll just have to wait and see. Now, looking at the VIX, of course, the VIX moved up on Friday. We're looking for a close on Monday below 1990. Not expecting that to happen. Probably a 99% chance that won't happen. If we look at the flypaper channel, you can see the bottom of the flypaper channel is around 1750 right now, and that's in line with the 200-day moving average, which is continuing to move slightly higher every day. But that's really what the market's going to be looking for, is a breakdown below the 200-day moving average before a lot of investors start to get bullish on the market once again. Let's move on to some of the major index ETFs that we follow. And the Canadian market has finally joined the US market on a sell signal. There's the iShares for the TSX 60, trading at the 50-day moving average. There's the Vanguard Canada ETF back on a sell signal as of Friday's close at the 50-day moving average. We've got small cap, second day of a sell signal there. Venture Exchange back on a sell signal, joining the financials already on a sell signal, breaking down below the January low. And then we've got Canadian banks now back on a sell signal as of Friday's close, joining gold stocks already on a sell signal. And then Canadian tech stocks pulling back a little over 1% on Friday, still on a buy signal. Now, looking at the US market, there's the Vanguard Total Market ETF on a sell signal, of course. The Dow broke down on Friday. Now, what's going to happen this week is a lot of people are going to be talking about moving averages. You can see that back in November, the Dow found support at the 100-day moving average. Back in October, it found support at the 50-day moving average. Both of those have been taken out now, and we're heading towards the 200-day moving average, which, from what we're seeing in the pre-market, we're going to open down below that level on Monday. Now, the Dow is certainly not as important as the S&P 500, which is struggling to hold the 100-day moving average, and it looks like it's going to head towards the 200-day moving average on Monday. Similar situation for the NASDAQ 100. The Russell 2000, small caps, micro caps, all holding the 100-day moving average. That is going to change on Monday. Financials broke down below the 200-day moving average a while ago. Now, U.S. bank stocks have also broken down below the 200-day moving average. So it's one thing to not hold the 200-day moving average. The next thing the world's going to be looking for is to see when these moving averages start to cross. This doesn't affect anything we're doing. I'm just talking about what the market's going to be talking about and looking at. And you can see that the 10-day has crossed the 50, and now we're going to be watching to see if the 50 crosses the 100, et cetera, et cetera. The more moving averages that cross each other, the worse it gets for the market. There is the GDX holding the 50-day moving average at the moment. Then we've got the SMH or semiconductors heading towards the 100-day. Now, this is the S&P Technology ETF, and you can see technology stocks holding the 200-day moving average right now. So the NASDAQ 100 is holding up better than this particular ETF, but this ETF looks like it's going to start breaking down below the 200-day moving average on Monday. Now, here's an interesting chart. We commented many times about the fact that the transport sector was helping hold the U.S. market up into 2026. And that, of course, has all started to break down. There's the 50, the 100. Looks like we're heading towards the 200-day moving average on Monday. Of course, higher energy prices is very negative for this particular sector, especially the airline stocks. There's the Jets ETF trading down towards the November lows. American Airlines has already taken out the November lows. Air Canada right down at the November lows. And then looking at Alaska, and there's Delta, JetBlue. We've got Southwest Airlines seems to be holding up fairly well at the moment. Ryanair making a new low for this move on Friday. And then we see SkyWest gapping lower on Friday. And we had a new low for United, so trading down, getting pretty close to those November lows on Friday. Okay, folks, that is all for this morning's presentation. Futures still heading sharply lower. Crude oil still above $100 as I finish this presentation. Have a great Monday. Next time you'll hear my voice is on Tuesday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.